Debates and COVID and margins. Oh my, what in the world we got ourselves into as we head into a new month? Most importantly, why do I see a contrarian side to this month? Well, I'm going to unpack that and more right here. Hey traders and investors, Tom Gentile here. Welcome to Tom's Trading Room, where we spot rules-based opportunities and create alternative strategies in the market other than simply buying and holding stocks. Do me a big favor right now and hit that like button at the bottom of this screen. Also, if you subscribe to these videos and ding the bell, we'll notify you as soon as a new one's uploaded. Okay, when I look at the month of October, number one, we got COVID cases rising once again. Number two, that mudslinging debate earlier this week, I kind of concluded the following. As an option trader, I chose to watch that debate. And in reflection, that is definitely time value that I'll never get back. Some real news I received this week was from one of my brokers, Interactive Brokers, informing me that they're going to be increasing margins on all account holders by 35% until we get through the election. But probably the biggest thing that I want to talk about is that my contrarian indicators that I got from my tools are telling me that October is seasonally a good month, unlike what you're hearing from everywhere else. So let's jump into my podcasting room right now where I can explain it all, as well as what I believe the best option strategies are to trade this month. Let's go. Okay, three things I want to get to today in this video. Number one, we'll do an assessment of stocks. Indices, we'll look at FANG Stocks. Number two, we're going to take a look at the money calendar and see if we can find tomorrow's trades today and why the money calendar is so bullish for the month of October. That's the big contrarian here. And number three, what is the best option strategy or strategies to look at in the month of October? SPY on the screen right now, guys. You can see the lows down here at 275 back in May. The highs close to 260 just before Labor Day weekend. And of course, we saw the big pullback that occurred afterwards. Markets are back to moving to the upside, but the volatility has not been moving down as the markets are moving up, suggesting there's more volatility to come. Now, I want to take a different approach this week, and I want to look at the other indices out there. So this is DIA. This is the Dow Jones Industrial Average ETF. Now, DIA trades 1/100th. All right, 1/100th of the Dow. So when you see this 230 down here back in mid-May, that's Dow 23,000. When you see 290 before Labor Day weekend, 29,000 Dow. What's happened? Pretty much the same thing. We've seen that big pullback, and now we're starting to see the run up in the Dow Jones Industrial Average. By the way, if things move the way that everything I'm looking at seem to be, that we should see the risk of moving, the markets are likely to move higher as a contrarian than moving lower. And there's several reasons. We're still in a buying area. We still have, there's no other place to really put money to work right now. And there's so much cash on the sidelines that they're waiting for those moves, and that a lot of that cash was moving into the markets, as you can also see with QQQ. All right, the power shares QQQ, which represents the Nasdaq, 220 down here in mid-May, over 300 back at the beginning of September. The pullback took us from 300 down to near 260 very, very quickly. Since then, we're powering back up, and power shares QQQ has powered itself above 280 now. Out of indices and ETFs and into FANG stocks. Let's start with Facebook. Facebook, and we did a video on this a couple weeks ago, guys. So go back to that video for the details. But you can see here with the move up from 146, all right, all the way up to 303, and then pull back, and we bounced right off that 38.2% retracement level. Right, take a look at the A's. The A's are Apple. I just did a video on Apple earlier in the week, and we talked about Apple being one of what I felt one of the strongest fundamentally, one of the strongest technically, one of the strongest seasonally in terms of stocks. And look what it's done in the last week. It's had a nice move, lift off of this 38.2% retracement level at 104.35. So it is well on its way to getting closer and closer to those all-time highs that we saw last month. Right? That's Apple. Amazon, the other A in FANG, it didn't even get to its, from its low at 1675 to its highs up here close to 3,600, 3,580. The pullback, it didn't hit the 38.2%, but it's been moving up since then and now trading back up above 3,200. Right? Netflix. Take a look at it. Best performer for the day, actually. As you can see, Netflix is low, 298.84. Its highs came right here around, and we do close to close here. All right, so its highs came around that 555 level. The pullback took it right into the 38.2% retracement at 458.10. It's been bouncing ever since, and it is well on its way to making new highs. All right, G for Google, and then I'm going to take a look at Tesla, even though it's not a FANG. I call it the fat G. But FANG here with with Google, we saw Google below 1080 on the low. We saw Google at 1720 on the high. We saw Google go through its 38.2% retracement. It did hit a round number support at 1400 and has bounced from there, but well within those Fibonacci buy zones. And finally, take a look at Tesla. I have got to do a video on electric publicly traded companies because there is definitely some fat premium out there, not only in Tesla, but there are two other companies that I'm looking at right now that have fat options premium. It's begging to be sold. I'll do that in a future video. But take a look at Tesla. You can see Tesla went from the lows at, and these are after splits, all right, 72.24 highs. Up here, above 500, we hit the 38.2% retracement in about a week after hitting those highs. And we've bounced, and this one's been a bit rocky, but look how close we are getting to those all-time highs again. Now that we've looked at the past and we've talked about the present, let's now look at the future, and to do that, we want to get into patterns. And for those of you that are new to patterns, I want to take you to my site, tomgentile.com. With elections, with COVID-19, with all of the social unrest that's happening, can these things affect the markets, and is it going to affect the presidential cycle pattern, this 4-year pattern? If you're interested in taking a look at this and downloading it absolutely free, then visit my site, tomgentile.com, and you can get that free presidential cycle pattern report. The money calendar looks like this right now. So we got the money calendar in October. And look at this screen, guys. There is nothing but green cheddar on the screen. All right, from today, October 1st, where 99% of the signals I'm getting are bullish and 1% are bearish. And if I take a look at October 1st and I rank this by what's trendy, what's the most trendy, AutoZone, Lam Research, Citi, JP Morgan, Disney, Philip Morris is on here as well, Johnson & Johnson. You take your pick. What I do is I look at these, all right? I look at these these seasonal trends. Like, for instance, I look at the seasonal trend, for instance, with AutoZone, and I see the beginning and end dates, October 1st today to November 9th. I take a look at all the data that we see here. I take a look at what it did in the past 10 years. Where's the loser at? All right. I actually look at the most recent winner, and I see what did it do. This was beautiful on the way up during this entire time frame last year. I take this and I match it with an appropriate option strategy. But you can see here, AZO, definitely one to look at. All right, so let's look at next week. Maybe you're just catching this video on the weekend. You're saying, Tom, I missed October the 1st. Hey, October 5th. Let's get ready for October 5th. Let's get ready for next Monday. And what we can see here is we see AutoZone, Lam Research, and Disney and Costco and BlackRock are still on here as positions to be looking at as we head into October. Hey, look, there's Starbucks. Hey, there's Papa John's. All right, there's some pizza and coffee on this list as well. So if you want to look at more of a defensive play in October, there's a couple of areas you can move to. All right, but that's what our October's looking like in terms of the money counter. Looking back at the month, it just shows me the entire month. And where do we get this data from? All right. Millions of data bits, guys, get crunched into this on the world's top stocks. And when you look at this list and you see October 5th, and I see 70 stocks, but 90% of those 70, 63 out of 70, have bullish patterns. That means that we've looked at back a minimum of 10 years. We've looked at all the dates surrounding October, maybe even into from October, that first day moving forward. We eliminate anything that has less than a 90% historical accuracy. And then finally, we're able to rank it by trend. And what's great is you can take this stuff and you can add it to whatever it is you're already doing in the markets and just add a seasonal picture to what you see happening in whatever stocks that you're currently trading right now. Finally, what is the best way to trade the month of October? Well, this little email I got from Interactive Brokers might help spell out an answer. Take a look at this. Dear client, this came in my email box just recently. As you likely observed, elevated option implied volatilities indicate that the markets will be confronting elevated volatility both before and after the November 2020 election. IBKR shares that sentiment and believe it's appropriate to start controlling leverage in a measured fashion in advance. Consequently, to protect IBKR and its customers, IBKR will increase margin requirements by as much as 35% above normal margin requirements leading up to the November U.S. election. Basically, what all this means in a nutshell, folks, is that margins are going up. So if you are a margin trader, and what I mean by that is that you buy stocks on margin, or if you are a net seller of options premium, maybe you sell puts, maybe you sell calls, got to have a lot of money to do that. Maybe you sell spreads and you have a posted margin for spread selling. Whatever you do as an option trader, if you are net short theta, that means that you are looking for options premium to decay in order to make money, you're going to be required to post more margin, especially if you're an Interactive Broker account client. And I'd be willing to bet the same thing's going to happen with other major brokers very, very soon. So, you know what this is telling me? The best side to trade in the market is the sell side. What I mean by that is I'm not talking about selling stock. I'm talking about, instead of buying stock, selling puts and acquiring the stock at lower prices. I'm talking about, instead of buying call options if you're bullish, maybe sell put spreads. Sushen, I'm talking about you. And if you're bearish on the stock market, instead of buying puts, perhaps selling call spreads. In summary, October could be a spooky month as we got a lot of unknowns still yet to be found out as we head through the month. Number two, a lot of those unknowns are going to mean bigger volatility and possibly bigger margin requirements as well. And finally, this is a contrarian trader's market. That means sometimes you got to do things that are against the herd, right? It's not always the most popular thing to do, but typically it ends up being the right thing to do. Hope you enjoyed the video, guys. We'll see you soon. Bye now.